Well, hello everybody, I'm LA Little and this is your daily NeoTA wrap. When we take a look at these markets, we do it from a neoclassical perspective each time, asking ourselves what happened today, what does it tell us about the coming ones. Do this show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel LA Little. And what a day. I mean, the market was down huge, flipped around, spikes higher, closes green across the board when it looked like it was going to be a pretty big loss on the day. So goes the market, so goes, the call. Last night, I told you I thought that this thing was going to try to work higher. It did work higher, but man, it tested people in between. If you look elsewhere, bonds were up, dollar was up big, gave up most of it. Silver and gold got whacked, even though they came off their lows. And copper's at like a 5-6 year low now. And that's a reflection of Chinese demand or lack thereof. Let's take a look at these indexes and see what we got. And actually, before we look at the indexes domestic, let's look at overseas and let's look at the lead up to our opening today. Nikkei got a nice bounce, right? Nice spike in the range. So that's just range trading. Let me bring the weekly over as well. Range trading up here in this higher range, right? Just going sideways. Volumes, trails, everything still looks good, and that's because the Nikkei is a reflection of the depreciation in the yen. But if we look elsewhere, not nearly as good. We did have in the Korean market a down day. If we look in the Indonesian market, we actually got a little doji to the top side, so not so good, but still better. Taiwan traded sideways to down. But then if we go to Shanghai gets whacked again, right? All the news I saw today was about how Shanghai was trading lower. Well, folks, Shanghai went under the lows, back over, does a reversal. This thing wants to trade higher tomorrow. But as far as today, it was down, right? It's down another 1.2%, 1.3%. And that's all you heard today is about the crash in China. That's all I heard, at least. If I go over to the Hong Kong market, of course, Hong Kong, anytime Shanghai gets whacked, it gets whacked. It's going for the lows, trying to test them. Didn't quite get to them inside day off that big wide price spread bar yesterday. If we go over and look at the weekly, this is coming in to do a retest regen off the prior swing point high. For those of you who haven't watched me very much, what I'm talking about is a neoclassical read that we use that says anytime you break out, right, over some swing point high, and it works the same way on lows, when you finally come back to test it, that's when you find whether or not the buyers are going to step up or not, because that is where they should step up. A retest and then a regenerate, an attempt to regenerate back in the direction of the trend. Trend is up, wants to regenerate back in that direction. Volumes, not heavy today, coming into this high, coming into this breakout bar with the volume on it. This thing looks to me like it's going to regenerate. The other big piece that you can look at with respect to neoclassical is anytime you go more than 6 bars, before you come back, odds are pretty good you are going to bounce. You're at least going to go sideways, more than likely, bounce. That's the Hang Seng. So tonight, no matter what happened today, even though it looked pretty bad, they want to bounce tonight. So that is the setup. If we go over to Europe, a different story, because we had disappointment off of what was happening with respect to Greece. And so they got together. There was no new proposal, that could be looked at. And so this market sold off as soon as that happened. It spikes down, closes at the lows, underneath the lows, so another swing point break. Actually, this one broke yesterday. So again, this thing has, and if we go back to that whole regeneration concept, let's go find our prior swing point low that we broke, and it was here, right? And so we got over it, which said, hey, we're probably going to hold, but then we got back under it, then we broke down. So actually, this one did not work as it should. In other words, as you come back, that should regenerate off the test, not after it goes over it. So that one actually failed. Let's look at the German. Actually, before we go to the German market, let's look at the CACs on the weekly. This now is finally coming back into, just like on the Hong Kong market, this one's coming right back into, do the test off the prior swing point high break. Now, this broke and tested already a couple times before it took off, so the probability is not as high. They're about 60%, but as it comes back in, volumes are not huge, right? This looks to me like it probably is going, this bar is going to hold and regenerate higher. So that's the CACs. Now let's go look at the DAX. So the German market. German market also gets under it, and if we look at the German market from the perspective of the retest regenerate, the break was here, and you had another swing point low there, and as the German market came up, it tested over it, got into the second one, and then gave it up immediately. And you know, it takes a couple bars to give you confidence that it really isn't going to regenerate, but this one actually did hold. So you get over it, back underneath it, you stay there, and then you give it up. You got an ABCD structure to the downside, so you've got this kind of action going on the downside now, wanting to take it lower. Okay, that's on the daily. If you look at the weekly, what is it doing? It's coming back in, and in this case, there isn't a retest regen. There's just a good support zone. You've got these bars here. There's a support zone right at the top of that. That's where it is now. If it gets through that, it's back down here at the bottom. So German market at support right now. This is where you should see buyers. If they're going to step up, this is where you probably will see them step up. If they don't, then it's going to, you know, push down off this ABCD structure, finish it, because it's already started it now, into that area where the strong support is. So if I look at these two markets, they can trade lower. There's nothing to guarantee they're going to trade higher. So Europe, a big question mark tonight. Asia wants to bounce. And now we can go to the US and take a look at what happened there. So if we pop over to the US markets, as I said, we were down big off of that setup in the European markets where they were selling off. That has us trading down this morning. We trade way down to 2044. Flip around, close, back over, right? Does a hammer reversal. Now the issue is that they left volume. And so when I'm looking at it, I see volume down here off this low, higher volume than we had at these lows. That was here, right? So you can see higher volume. Okay, so what does that tell me? Well, that says that this thing can trade back down and test again. Given what I see in Asia, and given where Europe is, where it has the potential to bounce, and when I look at some of the sectors, it looks to me like this is probably going to hold for now. We may test, we may see Europe trade down in the morning. We may test back into this area, right, and then bounce out of there from that area. It's going to be hard to just generate farther up. If you do, it's to here. If you look at the bearish retest regen, it's right now, it's off of this bar and this one. And so that setup, it's coming right back in to test it again tomorrow. If you get over this, you're going to try to test this one. That's the setup here. A lot of bears got trapped today. I'm sure a lot of this was short covering. So we'll probably see some sort of a fade off of this. But if they step back in and start buying it again, right, they're going to run this back up and test this breakdown bars high. That's the S&P. If we switch over to the NASDAQ, NASDAQ also has higher volume, but not that much, just barely. Nice hammer reversal under this low, back over it. You did about 20.2 versus, what was it, 21, I think, 21.3. You get under this one also. That one had 21.4 on it. So, excuse me, you didn't get under it. You got to it. The one over here, and I'm just looking at the lows, the one over here had 19.8. So you're pressing with as much volume or a little bit more. Flip around. Again, this can trade back into this low. That's about 49.55 or so, 56. And then from there, probably try to come back up and test the top of that breakdown bar. That's the NASDAQ. NDX looks just the exact same almost. And then you go to the Russell. Now the small caps trade down. Now the small caps are a little different. They come into this bottom. There's two bars down there. Come into this bottom. You're doing 379 over there, and you come into it with looks like 445. So you come into it with volume. The other one it's coming into is this one. Got into that big bar. That one did 450 versus over here 445. So again, if I draw them out so you can see which ones I'm talking about, as you're coming into the highest volume bar here, you're not doing quite as much volume there, almost as much. Big hammer reversal. What can this do? Well, it can trade back down just like the rest of them. I suspect if it trades down in the morning, it's going to trade to here. Where are they going to open tomorrow? Well, it's totally dependent, in my opinion, on what happens in Asia, and in particular what happens in Europe overnight. If Europe trades down by the time we open, we're going to open lower. If it doesn't, then they're going to flip this around and they're going to try to take it higher and take it back up to those areas that we were just talking about. Looking at the sectors, there's 2 or 3 sectors that gave off some decent signals today. Most of them did the same thing that we just saw here, and that is they left volume down there. Now, the low yesterday, I'm looking at the SOX because the SOX was under pressure off of earnings on AMD. The pressure here was off of this. Let me see. The low is 90.99. We close at 91.10, so we go under, back over, less volume. Hammer reversal. That one looks like it probably found a bottom. Now with hammers, you can trade halfway to 3/4 way down, and still, as long as you don't violate the bottom, it's still a clean reversal until it actually does whatever it's going to do. So right now, the way this is trading, looks like it's going to probably work its way back higher. If I look at some of the others, like for example, if I look at basic materials, these guys got smoked and they had volume. Even though they reversed, they're like the indexes. They had more volume. If I look at the energy, right? Energy was down big, also reverses, has a lot of volume. Technology trades down to the lows, underneath, back over, has more volume. So you can see most of these same sort of situations. Some of them, like if I go to the stronger ones, like consumer discretionary, doesn't have as much volume as it trades to those lows. If I look at healthcare, doesn't trade, actually, where's healthcare? Let me grab healthcare. If we look at healthcare, that one trades down, has as much volume, slightly less volume, I should say, goes under, back over, and holds. And finally, if we switch our attention to the OX markets and look at the bonds, bonds press higher. They press higher with volume at that swing point high. That top was 119.19. They close it at 119.26, so they get over it, stay over it. Even though it's an ugly candle, it stays over it and has volume. That looks like it wants to try to press higher, which means equity markets are probably going to struggle as a result of it. If I look at the dollar now, the dollar presses higher but gives it up. Comes back down. Of course, that was part of the reversal that took place today. If I look at the silver and gold markets, these guys got hammered. Volume expands on the silver market. And if I look at the gold market, volume expands as well. If you look at gold on a weekly, though, the volume isn't there and it's doing the test. This has the potential to set up some sort of a reversal. So on a weekly basis, gold, silver look like they may try to reverse. If we go look at the euro, pushes down and then reverses, comes back. So it looks to me like the euro is going to continue to hold. Dollar is going to continue to be somewhat weak. And they're going to, they being the traders, are going to continue to try to buy these markets. We may trade down tomorrow morning. I expect we're going to trade, well, we're going to thrash. We can, we got big bars now. So let me pull this back up and clarify what I want to say. So let me pull up, I'll pull up the S&P 500. You've got big wide price spread bars. I mean, this is 2083 down to 2044. So you did almost 40 points on the S&P. That's a lot of points. Average is maybe 10, right? You did almost 40. That kind of volatility doesn't just go away, right? You're going to see more volatility because of it. And so you should expect tomorrow that you're going to see big volatility. Where can it trade to? Like I just said, it can trade to the bottom of this bar, which is 2056, and still be fine. 2056, you closed at 2081. So in other words, you could go down 25 points and still be doing fine. That's the kind of volatility you got now, where an average day is 10, 12 points. And so don't be surprised if this thing opens down in the morning, pressured off of Europe, and then you see them start to buy it. I wouldn't, as a matter of fact, if they opened it down in the morning, if that first 5-10 minutes holds, they're probably going to turn it and try to run it back the other way. That's it for tonight. I am traveling this week, so the shows, I will do my best to get the shows out there on time, but it may be hard. But again, I will do my best. Bear with me as I'm on the road as this week begins. I will see you later. Thanks for joining me. Take care. Next time. Goodbye.